look at that balance sheet, you know it's not right, you know it's going to give you problems. What's like one or two adjectives that you feel like that balance sheet is?
Murdery. I feel murdery.
You go straight to the foul language, huh? Okay, good for you. You're a real tax guy. Okay, so one of the things that potentially could be said is scary. So we're close to Halloween, so we thought, this is our version of logic, is we thought we'd make a piñata, fill it with money, okay? And we do have a baseball bat. It's soft, it's foam, so it's not, be careful. Colleen is going to be holding, so if you hit Colleen, you owe us $500. She'll get $250, I'll get $250. No, but seriously, just don't hit anybody, please. There's not going to be any blindfolding. So as we work through, we want you to think of this balance sheet as, when I see a scary balance sheet, because it's got like a Halloween theme, right? It'll hopefully be clear at some point. And so as we work through it, the issues that come up, if somebody makes a good contribution and they want to take a swing at it, you come up, you take a whack at that particular issue that we just knocked out, and then we'll start having some money fall out of it as well as some candy. And so what we want you to think then when you see these kinds of scary balance sheets is, this is here to give me more money. So when I see it, it might be a little scary, but this is here to increase my revenue from this client. This is here to increase the value that I provide to this client. So we wanted to make that kind of tactile and hands-on. So you get a couple whacks at that. And actually, Karen and Imelda actually made this piñata. So it's homemade. Homemade. Does that make any sense? Or you're going to get in the piñata business? Yeah, if you need any piñatas. All right. So I'm not sure if that makes any sense to anybody, but like I said, there's $400 inside that. We want to also have some money for the happy hour, for the tip, for our wonderful host and bartender here. So let's make sure some of that makes it back there to the facility and to the team that works here. So the balance sheet workshop, if you look in your book, we have some just some preparatory materials on my part to say, knowing how to handle balance sheets that are not right is an opportunity, okay? And so if we look at it as an opportunity, we want to be able to handle those with confidence. And so by the end of this workshop, wherever you are now on fixing messed up balance sheets, or you maybe have like a complicated relationship with them, that kind of thing, we want to have by the end of this that you feel more confident in dealing with the most common issues, how to fix issues, and this should be opening up a new kind of client, a new level of confidence on a higher end client. So businesses that have over 250,000 in sales, right, most times need balance sheets. So those are the kind of clients, those are 2,000, 3,000, 4,000, 10,000 kinds of clients. And by the end of this workshop with Andrea, we're hoping we can all get better at the type of work, as well as hitting the piñata. So with that being said, Andrea, take it away.
All right, so first I was the step between y'all and your food, and now I'm the step between you and happy hour. So I'm going to try to keep you guys awake. I mean, balance sheets, most people don't think they're that sexy, but I think they're sexy as hell. So we're going to try to make this as interesting as possible. Before we get started, this is a dummy account, this is not live books, but I could show y'all some horror stories if I was able to keep it anonymous, because I've got some messed up balance sheets hanging out in my client list. So this is just a sample company. I created all of the transactions that we're going to be addressing in today's session. So it is a fairly simplified version of a messed up balance sheet because we only have 90 minutes, right? That sounds like a lot, but it's not. Before I get started, I just want to kind of poll the audience. How many of you already offer bookkeeping services? Okay, so a good number. Some of what I'm about to go over you might already know, but I'm going to start with a little like accounting 101, just to make sure that we're all on the same page. We all understand what is on the income statement, what is on the balance sheet, and how those two financial statements relate. Because if you're doing entity tax returns, you're filing a Schedule L, or you should be. I'm going to get on my little soapbox for a second here. And I realize if the entity has under a certain amount of assets or revenue, you don't have to include a balance sheet, but as professionals, I would argue that you should. So that's just my little soapbox moment. So real quick, tell me some common balance sheet issues you see when you're either reviewing a client's books or when you're reviewing the reports to prepare the tax returns. Terry? Just shout it out.
Uncategorized assets.
Uncategorized income, uncategorized expense, uncategorized assets. Marley?
That's undeposited funds.
Undeposited funds. Y'all, if you have clients, and let me be clear, I decided to use QuickBooks Online for this training. I wanted to keep it software agnostic, but we're going to use QBO. And so undeposited funds is a QuickBooks Online construct. If you have a client in QBO, you've probably seen undeposited funds. So we're going to talk about that. What else? What's a balance sheet? What is going on here? Okay. Sorry. Let me just move over a little bit. Okay. Yeah, what is a balance sheet? We're going to talk a little bit about that, and that might help you explain to your clients what it is. Sean?
Ask the accountant.
Oh, ask my accountant. I love that account. Ask client. I love that account. Trudy? Opening balance equity. OBE. That makes me feel super murdery. When I see opening balance equity, you should never have opening balance equity. If you have a tax client who works with a bookkeeper, because this isn't going to be you, because I know y'all would never do this. If you have a tax client who has a bookkeeper and you see opening balance equity on that balance sheet, they need to fire their bookkeeper today. Ooh, why? You got, okay. You don't have to air your dirty laundry. Go ahead.
Negative numbers.
Negative numbers. We're going to talk about that too. Negative numbers on the balance sheet where they don't belong, because some numbers are supposed to be negative. Tiffany?
Statement at the bank does not match the.
We're going to go over that too. So I created a fake bank statement, and we're going to look at that.
Cash can.
Cash what?
Cash.
Oh, yeah, cash. Like
Cash.
petty cash?
Like cash.
Like,
Like you get a bank account.
yeah. Okay, so another fun thing with QuickBooks Online, if you have clients who do their own books, you will probably see things like an account called personal, an account called gifts. Now, this section in QuickBooks Online is only supposed to be bank accounts. There probably is no bank account called gifts. What had happened was the client went in to create a new account, a new expense account that they wanted to call gifts. QuickBooks Online, when you create a new account, defaults to an account type of bank. The client doesn't know any better. They create the account, start posting stuff to gifts. Next thing you know, your balance sheet has a bank account called gifts, and your P&L does not have an expense account called gifts. That's a common problem. You will see it on almost every QBO account where the client does their own books or did at some point. Okay, any other major glaring balance sheet?
Clearing accounts, like if they have Shopify.
Clearing accounts. So
Retained earnings.
Retained earnings, that should be there, but you might see some wacky numbers. Okay, so those are all things that I had on my list, so I think this is gonna be a good thing. So let's really quickly do a little bit of accounting 101. Have y'all heard of debits and credits?
Yeah.
Happiness is when debits equal credits. A balance sheet has to balance. Accounting is called double entry accounting. For every debit, there has to be a credit. For a balance sheet, assets must equal liabilities plus equity. We know this from the tax return. It's true in the books. I have seen entity tax returns where the assets did not equal the liabilities plus equity. The balance sheet didn't balance. So accounting 101, debits must equal credits. The income statement reports income and expenses, right? That one's pretty easy. The bottom line of the income statement is the net income or the net loss. That flows through to the balance sheet into retained earnings. So that's how those two statements are connected. Sounds simple, but alas, it may not be. If you have never seen financial statements, then that might not make sense to you. So here is the P&L for my dummy QuickBooks account that I created. For those of you who hate negative numbers where they don't belong, what's the first thing that jumps out at you?
30,000.
You should not have an expense account for negative $30,000, right? So this dummy P&L, we're going to go through how to clean all that up. But what we're looking for here is this bottom line, net operating income. This company's doing pretty well. is going to flow to the balance sheet. It is part of retained earnings, but in QuickBooks, it shows as a separate line down here. This is important because when you're balancing the Schedule L on the entity return, you will need to add retained earnings plus the net income or loss. And that's what goes in retained earnings on the Schedule L.
Thanks so much for joining us. We really hope this session was helpful for you. If you enjoyed this and want more support on your tax professional journey, consider joining one of our Pronto Tax School memberships. As a member, you get to join weekly live mentor sessions just like this, access tons of advanced tax courses, be part of our private member groups, which is great for networking, grab special discounts for our live events, and even get tax business growth coaching. There's a lot packed in. Check out the links in the description to see the details for our Dream Team and Forever Edition memberships. We'd love to have you join our community.